Hello everyone, welcome back to my channel, and in today's video I will be talking on the topic of national income, which is very important when you study in the field of microeconomics. So to understand first what exactly national income means. National income, it means that the sum of total of monetary value of all goods and services which are produced in a country. So if we take an example of national income, so whatever goods are produced, so if we can take example of furniture is produced from wood. So from the journey of cutting down wood till the production of that furniture, whatever the income that has been produced by that process is what will be calculated in the national income. So following are some of the concepts which are related to the national income. First is GDP, that is gross domestic product. It means that when sum of market price of all goods and services in one financial year. So if we break it down, one financial year means we all know that financial year starts from 1st April to 31st of March, and market price of all goods and services. So we all know that wood cannot be directly sold. What is its final good? That final good and its market price will be considered as GDP. So it is basically sum of market price of all goods and services in one financial year. Next, GNP, that is gross national product. It is abroad income plus gross domestic product. So that is basically when abroad income means when we export certain items and we generate income in different currencies which are then converted to Indian rupees. So if we take an example, we produce certain things, certain spices are there, and we export them to United States of America. So when we sell those items, we will sell them in USD, that is dollars, and when we convert it, and that income will be considered as abroad income, and when we add that to our GDP, it becomes the gross national product. Okay, next is GDP at market price. So at market price means when we multiply the total output that a country has generated in one financial year, multiply the same with the domestic income. So our total output that we have generated multiplied by our domestic income, it is the GDP at market price. Next is GNP at market price. It is just the same, but total output is multiplied here by import and export. So gross national product at market price. To calculate this, we have to consider both import and export as well, add them and multiply their product or multiply their sum with total output of that particular financial year. Next is GDP at factor cost. So at market price and factor cost are two different things. So factor cost, the most important thing you need to understand is that taxes are being reduced here. When you reduce the taxes from GDP at market price, you get GDP at factor cost. Similarly, when you reduce taxes from GNP at market price, you get GNP at factor cost. Next, how do we measure national income? So there are mainly three methods. First method is income method. So income methods basically is when you calculate the earnings from all of the factors of production, it is income method. So factor of production we already know: land, labor, capital and entrepreneur. According to that, if we measure what comes from land, land gives you rent. Capital you get profit. For entrepreneur it is profit. So according to that, all four factors of production give certain income to us. That income, when you add together, it will create a national income, that is income method. Secondly being product method and output method. It is just a synonym for the same. Product and output method are the same. Here there are two different approaches. First approach being the final value goods approach. What this exactly means is, let's take the same example of wood. Wood you convert to furniture, that furniture's value will only be considered. The intermediary values, so if you take for example wood, if you cut wood, you can sell that wood also, and then it is refined and made into planks. You sell those planks also. You sell them to makers who make the furniture. There also selling happens. Till the time it comes to the consumer, it will be added. This is called as intermediary production. Now when you reduce all of these intermediary production, directly come to final goods, that is when final goods approach is considered. Similarly, if value added method is considered, so after you sell wood, what value has it added to that product? Let's take another example of milk. So milk, paneer, cheese, these are all added values. Original product is milk. When curd, cheese, paneer, etc. is made, value is added on that product. When you consider that specific value only, it is value added method. And last method is expenditure method. Expenditure method is just vice versa of income method. Just the word itself explains is whatever expenses have been incurred while making those products is considered in national income. Next, what is the importance of measuring national income in a particular country? So there are many advantages and many important points considering why you should measure national income. First, it helps government a lot. First, they need to form policies. We all know there are many policies which help us, but for them to make such policies, make it for rural areas and urban areas as well, they need to understand the per capita income, the national income of the entire country, the GDP of our country, the GNP of our country. Once the government has the statistical data of each and everything, they can make such policies. Next, measuring national income gives you idea about the output. So you are importing a lot, you are exporting a lot. So what exactly is fruitful for the country? You should export a lot and import less. Then only your economy becomes good. If you export a lot, then your value of currency will increase. But then if you don't have the data of this, how will you determine the same? So which is the reason why measuring national income is very important. Next is helps in development and economic growth as well. Again, last point is there are certain problems which are faced during measurement of national income. So there are mainly two problems. First is being conceptual and second being statistical. So conceptual beings is the theories. Basically we give methods of calculating, but these are only theories. On practical basis, you cannot directly calculate the exact number of national income. All of these are just estimates. These are not actual numbers. So these are just existed only in theories. Next is no actual national income is being calculated. Every time it is just an estimate. Even when you conduct census, it is an estimate. Some part or some community will also get left out even when you do consensus. Third point is only few factors are considered. Like I said, when you measure national income, all of the factors are not considered. So for example, let's take transfer payments are there. Transfer payment is basically your pension is there. Again, your PF is there. Provident fund, the cuts are there. They are not measured. They just happen. So online transactions and all, which cannot be measured by national income. So how do you measure those? So those are just left out. And only goods and services are included. What about other means by which income is generated? These are left out. If we consider statistical problems, is the value added approach, double counting. Like I said, if you consider the value of wood from the time it gets cut from the tree to the time it gets converted into the furniture and then again re-scrap it, the value will be counted a lot of times. Despite the value of wood being, suppose we say 1000 rupees, it will be counted so many times that the actual value will be lost. Then non-monetized sectors will be clearly left out by national income, and there are a lot of problems in that. And depreciation point is very important in statistical problems. So if we buy something, it becomes old. If you try to again resell it, the value you will resell, you won't get the same. There are certain exceptions to the same, just like land, gold, etc. But if you take a material thing, you buy it and you try to resell it in the market, the value of that will be depriving. So it is depreciating. So even if you resell the same exact item, you won't get the same value as you have bought. So this is not considered by national income. And then again, final product pricing. So each and every market, it depends what is the price of a particular product. Some market it may be less, some market it may be more. So how do you determine both of these values? So these are the problems which are faced during measurement of national income. And with this, I have covered the entire topic of national income. Thanks all for watching, and the PPT of this same will be provided in the description. Thank you.